Welcome back, everybody, to another episode of Take Back Control Tuesday. Now, I can't tell you what the outcome is going to be for each and every one of you, but what I can tell you is for the next hour and 40 minutes, the time we're going to spend together, if you apply what you learn, this will change your financial future. If you're here, that means you're ready for change. And tonight, that's exactly what we're going to deliver. I've got a special guest for you. His name's Jason Sipple. He is a master of what you're going to learn. But what are you going to learn? Well, Jason's going to teach you three things. He's going to teach you how to take back control of your money by being your own bank. And then he's also going to teach you how to build wealth through your own debts and expenses. That'll be the second thing you learn. And the third thing you'll learn, hence the cars, you're going to learn how to get all the money back for every single car that you ever buy, drive, and own. And before you get into it, one last favor, just click that button right there, the subscribe button. It would do me a huge favor. And also, right above is a little bell. Smash that bell so that every time I put new content out, you'll be notified. So I don't want to waste any more time. It's time for Jason to really show you all about the infinite banking concepts. Let's roll.
Take back control.
Tuesday night.
Tuesday?
What if by changing just one thing, everything could be better in your financial life? Would you do that one thing? Would you make the change? That one paradigm shift and that new skill is the gap, the space between you and the wealthiest families, between you and actually everything you desire. So in the chat here, who here, since I can't see your hands, who here wants more money? Who here wants more control of the money that you're already making and keep more of the money? Anybody? A little I? Who here wants more freedom? I imagine all of you are saying yes. And if you haven't, then, focus in, because I'm talking about your life, your future, your dreams, goals, and aspirations. And I'm going to show you how you can guarantee your path forward and take away a lot of the worry. And this little known secret, this little known fact is known by the wealthiest families and visionaries like Walt Disney, like the Rockefellers. And they've all used this strategy called the infinite banking concept to build and preserve their empires. The strategy is simple, it's legal, and it's something that you all have access to. And it all starts with changing that one thing. Start paying yourself first. Shockingly, we're giving away a big chunk of our money every time we get paid. And we're giving it away to the other families, right? To the enemy. I like to call them the evil empire, the bank, Wall Street, and the government. And would all of you like to know how you can recapture and recycle all of that money, bringing it back into your family? And again, it all starts with that one thing, that one simple thing, changing where your money goes first. So if you hold that as true, if you trust in what I teach you, remember everything is about long-term thinking, progress equals happiness, and changing that one thing. So we're going to dive into the banking process in this presentation. We're going to talk about the truths about money. And we're going to show you how you can make money with every car you buy, drive, and own, and how to turn your debts into assets, and how the banks make their fortune, and why success leaves clues like the big man, Tony Robbins, has taught us. So as I go through these real life examples, all I ask is for your participation, because you're here giving your most valuable asset, your time, your attention, your money. You're doing something that most people won't do, but participate, ask questions, share thoughts in the chat, and at the same time, give yourself permission to learn what you don't know yet. So let's jump into this. Now I want you all to envision, imagine, close your eyes if you need to, but see yourself in a room. Now you might be a little overwhelmed, but in a room of 100 new grad high school graduates, 118-year-olds, right? And they are excited about what's next. They've just graduated. They have big plans, big dreams. And I asked the simple question, who here is going to be successful by the time that you're at retirement age? Their hands are going to shoot up so fast. They're going to be jumping out of their seats. They're not going to be wait to be called on. They're going to be like, ooh, I am. I'm going to be the next millionaire, the next billionaire, the first billionaire as a one-person company. I'm going to do things that no one else has ever done. I'm going to eclipse what Mark Zuckerberg's done or Elon or any of the wealthiest have already created. I am going to be next. What's next? But then what happens? In the next 4 decades, something slow and insidious and really not noticed happens over time. Over time, these excited 18-year-olds, they give up control of their money, they assume all the risk, and they end up being part of this shocking statistic. They end up being part of the 5 of 100 people will be financially secure by the time they reach retirement age, according to the Social Security Administration. I heard today this is another stat in another book by Dr. Benjamin Hardy, that people start thinking about retirement about age 27, and 4 decades later, when they reach 67, they have about 107,000 total, which is $320 a month to live on. How's that possible? We live in the greatest country and the greatest time in history ever. Think about that. In human history, this is the greatest, the most abundant time in history. How's this possible? It's because we are all doing something that we don't even notice. We're conforming. We're conforming to someone else's rules because we haven't been taught the rules. So today, if you keep an open mind, I'm going to show you what the banks, the government, and Wall Street are doing to have you conform, and how you, by changing one thing, can take back control. So who am I and why am I here to share this? And like Will says right here, the problem in America isn't so much what people don't know, it's what people think they know that just ain't so. And Will said this over 50 years ago. Nothing's changed. If anything, even though we have more freedom, we're giving up more control because everything's about convenience. Everything's about looking to someone else to solve our problems. So if you all hold your minds open, hold space for something new, let me show you what we're going to talk about today. So again, why am I here? Why do I have the opportunity to be with all of you on this Take Back Control Tuesday? It's simple. At some point, I used to think showing up first, leaving last, working hard, being humble, being polite, doing all the things my parents so amazingly taught me, great formula to be a great employee, does not lead to financial success. No matter how much money I made, we always found ourselves practically living paycheck to paycheck. And so back in the beginning of 2020, I realized when I left my $180,000 a year job, I realized that I was giving up massive amounts of time. I was working an extra 30 hours a week to make what I was 5 years before. Now I had built a $25 million recruitment division in just 3.5 years. We had scaled the company from 30 to 600 million. I was halfway through my MBA in leadership because before that, I had a bachelor in fine arts in medical illustration. What's that have to do with leadership, right? And I thought that I didn't have the tools to be at that next level of corporate success. So I was playing their game. I was doing the things to be involved in that amazing company. But at the end of the day, I realized that wasn't me. That wasn't what God put me here for. That wasn't how I was going to give my family, my beautiful wife, my 2 sons you see there, the freedoms and the ability to create their dreams. Because I wasn't creating my dream. I was creating someone else's dream. And so I found myself less than a year later in the back of a mastermind, part of another team, leading a group of individuals like you, like the amazing folks here, about what is your vision? What is your dream? What is a thing that is a magnet to your future? What is the thing that gets you out of bed? What is your why? And what's the why below that why that drives you, that doesn't feel like work? What are you passionate about? What do you love? Where are you going to go? What skills do you need? And I started crying. I broke down and I started crying because I realized in that moment my pattern. My pattern was I was afraid of failure. I was afraid of rejection. And I was building other people's dreams for them because I was afraid and I didn't have the courage to build my own dreams. And so when I got back to Orlando, I went and asked a friend who's a fiduciary with 40 wealth management offices, one of the most successful people I know when it comes to understand the game of money. And so I asked for help, and he handed me this book, which we're going to talk about more on the next page, but I'm giving it away. Like, he handed me this book and it changed my life. And when I read it, I got angry. Probably like many of you did. I got angry and I thought, if this was true, every American would do this. Everyone who was able to do this would do this. Factually, full stop. Everyone would do this, especially if we were taught this from a young age, like we have the opportunity to do now with our kids, grandkids, and the future. So it became my mission 4 years ago to serve folks like you, to educate you, and to give you back the power financially. So let's look into who else, because this isn't new. Like I said, it's been around for a couple hundred years. But who are some people that you may have heard of that know and talk about this, and why haven't you heard about it before if you're new here? There's this one guy, he has a rich dad and a poor dad. You guys know his name? Yvonne, I'll get to that book here in a second. Robert Kiyosaki. And this other guy, he's a big dude, like 6'7", he's huge. And he has a book called Money Master the Game. And in section 5.2, Tony Robbins talks about it. And then the book that Yvonne just asked about that changed my life is this book, Becoming Your Own Banker. Notice banker is a verb. Banker is a verb. It's the verb of banking. We got Brent and Chris wrote Mapping Out the Millionaire Mystery, which is a modern take of their journey on becoming their own banker. And then you got the Private Money Guide, which teaches us how we keep money in motion. So let's dive into this interesting concept called the backwards bicycle. Now, if you guys haven't seen this, this is something where you want to go and YouTube this, look it up, and really dive into this. It's a 20-minute video, so I'm not going to show you today what it looks like, but this backwards bicycle will blow your mind. And I want to ask you, who learns quickly? Who learns quickly? See, Joe says it's awesome. It is super awesome. It's funny and it's really interesting, the backwards bicycle. Who learns quickly? Our kids, because their brains have not been, their grooves in their neural pathways have not been cemented. They don't have a fixed mindset like we do as we get older. Like, I'm 50 now. It's hard to have a paradigm shift at our age. But when you learned how to ride a bike, you do what? You push down on the pedals, the bike goes forward. You turn the handlebars right, the bike goes right. You turn the handlebars left, the bike goes left. It's pretty simple. Imagine if it didn't work that way. Imagine, like this welder did to the engineers, imagine if you turn right, the bike went left. If you turn left, the bike went right. Who here thinks they could ride this bike? I always say I could, but I know better after watching this full video a few times. But I always think that we could do that. Julie says, nope. I'm hoping that if you guys saw me, because I would try it. My favorite shirt says, that's a horrible idea. What time? So as I try to ride this bike in front of all of you fine folks here today, when I fall, I hope you wait till I get up before you laugh. You have my permission to laugh, but wait till I get up. But the point here is, imagine if your money worked just like the backwards bicycle. What if you were taught to ride the bike one way, but your money actually works more like the backwards bicycle? So shifting your mindset can be difficult, but it's not impossible. Think of riding the backwards bicycle, and again, write this down. Give yourself permission to acknowledge you just might not know how to do this, ... yet, okay? So let's talk about, why aren't people more successful? I'm going to move this slide a little faster so I can spend more time on some of the other slides. But what are some of the mindset and the math of money? What are some of the wealth killers? Who here doesn't pay enough taxes? Who thinks they should pay more taxes or wants to pay more taxes? Anybody? Do I get any yeses? No, right? Taxes. No one wants to pay more taxes. And then think about the silent wealth killer is inflation. And that comes from the printing of money. And then we have volatility. We've all heard of booms and busts, a bull market, a bear market, right? The ups and downs. Well, what if that was actually created intentionally? And that's something that's always going to be. What if you understood that and you could learn how to navigate it? And then the interest. We finance everything we buy factually. We either are earning interest, paying interest, or the third option, if you're a person that pays in cash, we got a lot of our cash people, any cash people here today, is we are going to give up the opportunity that our money could earn us interest over time. And on the mindset, we already talked about conforming, following the status quo. We already talked about the fears, fear of rejection, fear of failure. Even though we are way civilized, we still go back to our caveman roots and worried about being ostracized and not belonging. So what do? We try to keep up with the Joneses. We do things that don't make sense. And then what we're taught about money is really not the truth around money. And so let's talk about some of the mysteries of money. Can I get a definition of what is money? What is the definition of money? And Jennifer, every time I look at your name, I see the initials JS. It's my initials. So that's cool. We got franchise, we got Julie. Can I get a definition of money? A tool. That's it. A means of exchange. Nothing more. How about this? Money is just energy. Nothing more. Nothing less. Right? Money for house, house for money. Money for car, car for money. Money for candy bar, which we're going to talk about. Candy bar for money. You know who's putting the, sorry, ruin your candy bar fix, but it's poison. Don't eat it. It's not good for you in small bites. And what company uses compound interest? Ooh, I know, Jason, call me. It's the banks. No, Jason, the banks don't use compound interest, you silly guy. They might pay interest, but they don't use compound interest because they understand the laws of nature. What do you mean? Well, money in motion makes more money. So banks understand the money must stay in motion for them to make more money. But they'll gladly give me a dum-dum pop every time I give them my money so they can make more money. That's interesting. And are your dollars worth more today or in the future? Now, this is we go back to the candy bars. Think about this. Today, if you had $1, could you even buy a candy bar, right? Julie's got the answer right. Terry's got the answer right. If you try to go buy a candy bar with $1 today, you're not going to get very far. But go back 20 years if you had $1, you can probably buy 2, 3 candy bars. So our dollars are always worth more presently, today. They're going to be worth less in the future. Taxes, are they going up or down? Anyone familiar with the debtclock.org, usdebtclock.org, right? We're $34 trillion in debt as a country. 2 years from now, we'll be 44 trillion. We're adding another 10 trillion of debt. So for anyone that thinks taxes are going to be less by the time they retire, you might want to rethink that. I don't have a crystal ball, so I don't really know. But I would say it's pretty practical that they're going to go up in the future. So when do we want to pay the taxes on the seed or the harvest? Just something to think about. Do you want to pay taxes on the seed when it's small? It's like fighting a monster. When do you want to fight a monster? When it's a baby monster or when it's a giant monster, when it's Godzilla size? And what do you know about your retirement account? If you were like me, when I was putting as much as I was allowed to every single year into my Schwab 401k, I didn't know anything. And every time they would ask me questions, Jason, how do you feel about taking on more risk if you want to retire early? I don't know what that means. What do you mean? I don't gamble. So why do I want to be more risky with my money for my future? Okay, if you don't want to take on more risk, how do you feel about retiring 15 years later? Like retiring in your 70s? I'll be, wait, I said 55. How do we get to 70 something? Well, you know, you have to leave your money in there so it can grow over time. And all we really, if you're not someone who's really on top of it and managing your money and understanding what's happening in that account, all we're doing is locking our money in financial prison. As taxes go up, our dollars become worth less. So it's kind of a silly thing. Now, I know this is a lot for you to digest, I was giving you a bunch of different facts and things to think about. But what if the traditional way that you've been taught to think about money isn't actually the truth? What if these concepts need to be challenged so you can understand how money and money in motion truly works? So let's talk about the money multiplier method. What are the 3 simple steps? Who here likes simple? Again, I in the chat if you guys like simple. And thank Jennifer. Any of the questions we have, please hold on to those at the end. You know, as every time that we do this Take Back Control Tuesday, you can not only watch this video again, but you can also have a conversation with me to learn more about how this works. I'll pop my information into the chat as well. So remember, write down your questions. Wherever you're at in your journey, we can provide more resources, as well as you can have a strategy call that helps you meet you where you're at today, and then helps you meet those goals in the long term and the short term, and all of that together. So the money multiplier method, what is it? 3 steps. The machine, which I talked about a little bit already, gave you a little bit of foreshadowing. We've got the marathon, and as many of you know that know me, you see my shirt, I don't run a marathon unless I've cycled 112 miles after I've swam 2.4 miles. But that's the time where I like to run my marathon. So the long-term thinking is the #1 principle of infinite banking. And finally, the millionaire mystery, which is what Chris and Brent's book's about, mapping out the millionaire mystery. I will factually show you how one of our clients turned his debts into assets and became a millionaire within a few years, and way faster than if he would have kept doing the traditional thing. So let's talk about the machine. What is the machine? The machine, now I've got news, I'm sorry. Banking is boring. At the end of the day, all the energy, all the excitement I'm bringing you, this is boring stuff. It's dividend paying, whole life insurance from a mutually owned company. That's it. That is the changing the one thing. Where does our savings go first? It goes into the machine. It goes into this machine. A dividend paying, specially engineered for you, whole life insurance policy from a mutually owned company that's been reputable and profitable every year for more than a century. So that's over 100 years, 119 to 170 years. What are we not talking about? Please, if you're writing in the chat, hear me here. We're not talking about something that you don't control, right? Do you guys want to control your money, or who do you want to be in control of your money is a better question. Who do you want to be in control of your money? Anybody? Who do you want to be in control of your money? Anthony says, me. Thank you, Anthony. Julie, me. Self, me. Okay. So what we're not talking about a contract that another party is actually in charge of, okay? In control of. So anything with a UL, IUL, VUL, UL, and term, we're not talking about those. Even though term, you're kind of in charge, but it's more like you're renting, leasing, right? You're hoping that, God forbid, something happens, your family's taken care of, but they pay out like 1% to 2% of the time. So all of these might have a place, but not in the conversation of banking, the way that we're taught with the Nelson Nash Institute, being a certified IBC practitioner. We're not talking about IULs, VULs, ULs, and ULs, which have been around less time than I've been alive. So we're talking about something that's been around for 5 times as long as I've been alive, 50 years old, okay? So just perspective, that's the long-term portion of things. And let's do a fun interactive exercise. So everybody grab your pen, paper, crayon, whatever you have to draw, and write the bank and policy. This is for your fridge, so if you're with a friend, whoever has the best handwriting, please have that person write this down. This is for yourself, for your spouse, for your kids. So under bank, under policy, write the word liquidity. What do you mean by liquidity, Jason? I mean access to your money. It's not locked up in financial prison. It's like in your bank account. You can have the money when you need it. You can go in and access it. There's no penalty for touching it. Under bank, does anyone here have a high yield savings account? Okay, Anthony, what's your rate that it's paying you? 4.25%. So if you're Anthony, Julie, 4.7, okay. You get a 0.5% over Anthony there. So write down your 4.7, write down the 4.25, write down whatever you're actually earning. Most conventional banks are paying 0.07% on regular old savings. Write down 3.25% on the policy side. Yes, you're already noticing that is less than what Julie and Anthony shared, but 3.25%. That's the first of two guarantees. I love what I do because contractually you have guarantees, and the only threat to this equation is the person in the mirror. But I digress a little bit. Under bank, taxable. All of that growth on the 4.7, the 4.25% is taxable. That's taxable income. So that's going to be taxed, whatever tax bracket you fall in, it's going to be taxable. Under policy, all of that growth is tax advantage, is tax-free. It's tax-free growth, tax-free loans, tax-free distribution. Again, tax advantage is the more appropriate term, but tax-free. Under bank, unstable. Jason, what do you mean by unstable? Well, think about Governor Newsom. Think about the Silicon Valley Bank in the beginning of 2023. What happened? The bank went bankrupt. The bank went bankrupt and it got bailed out. And then a bunch of other banks went bankrupt. And then later in the year, more banks went bankrupt. And we saw more banks in 2024 going bankrupt. How's it possible? It's a bank. Well, banks practice fractional reserve banking. So they're only keeping 10% at the most inside their bank. And under policy, we have stable. The company that has the 3.25% guarantee, that is where all four of the Sipple family banking policies are held. And they've been profitable every year they've been open, 148 years consecutively. Has anybody been running their business for 148 years, being profitable? Anybody every year here? And I thought maybe we have a couple of mortals amongst you, right? No, nobody's had their business for 148 years, but think about all the things that have happened during that period of time for them to be profitable every year. Great Depression, World War I, World War II, Vietnam, coming off the gold standard, the dot-com crisis, the 2008, housing bubble crisis. So all of those things. Under the bank, it's unprotected. Like whatever amount that Julie and Anthony have, if someone gets hurt in their business or on their property, or they get sued for some reason, guess what? A good attorney is going to be able to access the money in that high yield account. It's not protected. But in a policy, it's protected against liens and judgment. Even in California, where it's not fully protected, you have more protection than you have in a bank. Florida, fully protected. It's state regulated insurances. So let's look quickly at this Coke versus Pepsi taste test. On the living benefits side, what are we showing? We're showing that we have guaranteed growth. We're showing that it's tax-free guaranteed compounding growth. You have access to the money. It's in a stable environment, and it's protected against liens and judgment. Okay? On the bank side, we have no death benefit. On the policy side, we have our second guarantee. And that is the guarantee of a tax-free estate for the ones we love or the things we love, right? So the question becomes, where do the banks keep their money? You guys had a guess. Where do you think the banks are keeping their money? Any guesses? That's right. The banks are keeping their money in specially engineered whole life, like Anthony said. Anthony, have you seen this presentation before? So bank-owned life insurance, Google this, don't trust me, look it up yourself. Banks own over $202 billion of specially engineered whole life, right? A couple months ago when I started teaching this, maybe 6, 7, 8 months ago, banks had about 180 billion. That's a $22 billion increase in less than a year. That's wild, right? So where should we store our money? I'm telling you where I'm storing my money, so where should we store our money?
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action like so many others have by going to privatemoneyclub.com and sign up.
And how does your money flow? This is what I was inviting you guys earlier. Don't get stuck. Don't get stuck on any of these parts because you can go back and watch this, but just take a look at this. Hold disbelief, like you're watching a thriller, right? Like the aliens are coming. So we're going to talk about how does the money flow? We're going to imagine like Julie's bank, like Anthony's bank. I am a banker and I am super generous. I am giving you 4% to keep your money in my account. Now I'm going to use Julie because Julie is responsible, she's disciplined, and she's been saving her money. And so Julie comes in and sees me. It's like, hey, Jason, I've been saving my money for the last 4 years and I want to purchase a new car. And don't get hung up on the numbers. If you want to go, if Julie wanted to buy a Ferrari, just add another zero, right? Instead of a Fiat or a Focus. But she's coming in, she's like, I want to go buy this new car. I'm ready for the new car smell. I'm tired of my old beater. It's time for an upgrade. And I was like, wow, Julie, congratulations. You've been so disciplined. You've picked discipline over regret. I'm excited for you. I'm excited. But Julie, let's do this. I'm going to give you a loan for 6% over that 60 months. I'll keep your money compounding in my bank and you'll make 4%. And at the end of that period, you'll make money, Julie. I will lend you money at 6%. Your money will compound at 4%. Am I, Jason, the banker, telling you the truth, telling Julie the truth? Yes. Julie says, yes. Thank you, Julie. But 4 minus 6 is -2, right? So I would think if I was listening for the first time that, no, Jason, you're losing money. How could you make money in that scenario? Let's look at the math, right? Let's look at the math. $483.32 for 60 months equals a future value of $28,999. The future value of Julie's money growing at 4% uninterrupted is $30,000. Is $30,000 more than $29,000? Right? The answer is yes. Julie has made money, like Julie said. So I've been an honest banker. And why did this happen? Because in one, you have a depreciating value, depreciating amount you're paying. On the other, you have uninterrupted compounding interest. So let's take this same principle and look at Julie's now, because she already trusts me, going to put $100,000 into my bank. And I'm going to pay her 4% because I'm super generous. But let's look at what the bank is doing with Julie's money. And keep in mind, who earned this money? Was it the bank or Julie? The bank or Julie earned this money? Julie earned the money. So Julie understands, remember, money in what makes more money? Money in motion makes more money. So Julie's going to lend 7% out, or Julie's bank is going to lend 7% out to someone buying a home. The seller is going to put the money back in the bank because they have to store it somewhere. But we're going to keep that circle that Chris Naugle always talks about. We're going to keep that money in motion. Now we're going to lend the money out for 8%, the bank is. Car dealer is going to put the money back in. Now a home remodel, the money's going to come back in. And now debt consolidation, and the money's going to come back in. Well, let's look at how much interest or difference in interest, the spread, right? How much they're lending the money out and how much they're paying Julie on her 100,000. So we got 7 minus 4 is 3, 8 minus 4 is 4, 9 minus 4 is 5, right? Come on. And 12 minus 4 is 8. We add these together, we get 20%. So Julie has made 4%. My bank has made 20%. How much more have I made than Julie? How much more? I'm going to give you the answer in time, but if you look, 20 is how much greater than 4? It's 5x greater. So that means that I have made, or the bank has made, 500% on whose money? The bank's money or someone else's money? Your money, Julie's money, right? This is shocking, almost like the statistic of only 5 out of 100 people will be financially stable, but go to bauerfinancial.com if you care to. Look up any bank, the bank that you hold your money at or put your money into. Every single bank on an annual basis makes 400 to 1,300% on the money that we deposit there. So tell me, what's the most valuable business that you could ever start? It is the business of banking. And now it gets worse. I'm sorry, but it gets worse. So let's look how we're groomed to spend our money. This is our annual pattern of spending for the last at least 4 decades. 20 cents of every dollar to an automobile. A lot of people I talk to spend a lot more than 20 cents. 30 cents on housing, 40 cents on everything else, and we're saving 10%. Look this up. The truth is Americans are saving less than 5% of every dollar, so we're being super generous. Now let's look at what happens if we were to use our own system and pay ourselves first. So we're not giving away this interest to every other family. Okay, this one takes some conceptual thinking through it, but now that 5 cents of every dollar of interest for our vehicle loan is now going back to our savings. 25 cents of the 30 cents we pay is going back to the housing. Anyone's moved into their home in the last 7 years, do not go look at your mortgage statement after this call. Do not, you will not like me. Wait a couple days. But when you look, you're going to see that 70 to 80% is going towards the interest. Very little is going towards the principal. And why did a bank set up a 30-year or 15-year mortgage this way? Because people move how often? Any guesses? That's the banks know that we typically move. Like we've been in this home for 7 years and we want to move. Why is that? Is it because we're programming or we get bored or we need a change? I'm not really sure. But the truth is that we're giving away this much money to the banking system and then everything else 5 cents. So now if you add these together, you got 35 cents plus the 10, you got 45 cents. Who wants a 45% raise? Anybody? Anybody want a 45 cent per dollar raise? Yeah. And so let's look at, I promised in the beginning, remember, let's look under the hood of the machine. Let's look how we're going to get back all of the money for every truck or car that you ever buy, drive, and own. How is this possible? And I want you to think about how you've purchased your vehicles. I know how everyone here that's not banking has purchased their vehicles. You've either paid cash for it, you've leased it, or you have financed it. Those are the 3 ways to buy a vehicle before you've seen this. This is going to be the most optimal way. So hang with me. Let's look under the hood. We're going to talk about the premiums being deposits. Premium deposits. Because guess what? Your first couple years of being your own banking system, it's going to feel like a premium or a payment. But as you get ingrained with this new pattern, as you start getting really fluid riding this backwards bicycle, you're going to get excited to pay your premium deposit. You got to wire that in. And the age doesn't matter. The majority of people I talk to are in their 50s, their 60s, and their 70s. And my guess, I don't have a big enough cross section. It's been 3,000 plus people I've spoken to. We've served probably hundreds of thousands of people right now. We've helped over 17,000 people get started with this. But my guess would be that as humans, our nature, we are more likely to move away from pain than we are towards pleasure. So people don't make it to me and to our team until they've had enough pain. So again, your age doesn't matter. You're asking, am I too old? No. 50s, 60s, early 70s, you are not too old. I'm even working with someone that's 81. He can't necessarily do what we're teaching here, but we're using his grown sons and his grandchildren and setting up a whole system for them. So there's ways to get creative. And the death benefit, it's super important. We don't emphasize it enough, but we're not going to talk about it when we're talking about banking. So let's look at, remember Julie, how disciplined she was? Going to use you again, Julie. Oh, you can steal it too. Anthony says you can steal a car. That's where he is. So if anybody knows Anthony, don't rat him out. That's pretty funny, Anthony. You got me, throw me off a little bit. So Julie being super disciplined, remember she's depositing, saving money versus practicing the pain of regret. She puts her money as a premium deposit. In year 3, she's going to take a loan for $25,000. Now, Julie's going to pay herself back her banking system. We're teaching you to be an honest banker. She's going to pay herself back $500 a month, which times 12 is $6,000 a year. So over 7 years, she's deposited $70,000 into premium deposits. She's paid her loan back $30,000, and she's taken a loan for $25,000. So she has $75,000 left, right? Look at her cash value, $67,000 and change. She has now recaptured 91 cents of every dollar she paid for the vehicle. Have any of you ever had 90 plus cents of every dollar and the vehicle that you bought 5 years ago? Julie, buying a Corolla, I like it. Nope, nobody has. And so when you think about who could use infinite banking, that's anybody. But first, we have to understand what we've been doing instead. We're going to do something crazy, and we're not going to make any more premium deposits. I declare this is insane, and this is not how I would teach you, but I'm going to show you what happens by not putting any more premium deposits. Julie wants a new Corolla. So Julie, come on down. Get your new Corolla. Take a $25,000 loan, and guess what? You're paying it back the same way you paid it back before. Julie has a second Corolla. This one is a different color than her first, so now she's got black and white, blue and red, whatever Julie's favorite colors are. She's got one of each. And now she's paid herself back. She's taken the loan. And let's look. Julie's cash value in the account has risen $23,592. So now, without making any more deposits, with just taking a loan and paying herself back, being an honest banker, Julie has increased the amount of cash by $23,592. How's that possible? How is that possible, right? Because she's never interrupted the compounding. So the 3 rules to make this work for you is, number 1, pay yourself first as if your life depends on it, because it actually does. Pay yourself with interest. Remember, we're always financing everything we buy. So why not keep the interest in your family? And recycle and recapture your money. So if this works for a car, what else would this work for? You guys think of anything else this would work for? Let's look, because I promised in the beginning, how we're going to turn our debts into assets. This is an actual client of Brent's and of the Money Multiplier. It's I won't give you his name, his real name, but it's one of the chiropractors from Minnesota. He came up to us after one of our presentations, this very presentation, and he said, "Can you guys help me?" We said, "Sure. What's going on? What's your problem?" Debt. Debt is killing me. The harder I work, the less I keep. It's like the government's always sitting there with a fork and knife ready to eat. But I'm working harder, I'm expanding my business, but I'm not getting ahead. Okay, well, show us your debt. So this is his debt, his exact profile. $478,000 in debt. So not as much debt as Brent had when he started, over $984,000 in debt, but quite a bit of debt. His payments per month were $5,777. That's almost $6,000. That's $72,000 a year almost, right? If he just kept paying things to the other families the way he was doing it, it was going to take him 19 years to pay off all this debt. So we asked him a simple question. "Doc, how much are you saving?" And he said, "Well, on a month-to-month basis, I'm not saving a lot, but I am putting about $25,000 a year into my retirement account." We said, "Okay, would you be willing to change that one thing? Would you be willing, instead of putting money into your retirement, because look, if you're giving away $5,777 a month, would that be substantial and valuable if you could take that money back and keep that money in your family?" He was like, "Yeah." It's like, "I trust you guys. I've known you for a while. I've been watching this for a while. Instead of putting that $25,000 into my qualified plan, I'm going to put it into a policy, and let's see what happens when he did this." Year 1, he deposits $25,000, and what's he do immediately? Within the first 30 days, he takes a loan out, and he uses that loan to pay off 2 debts, his Discover and his Lowe's card. Now he's immediately in year 1 recaptured almost $500 a month, right? So remember, all we're changing is one thing. So in the whole time we're going through this, we're changing one thing. Where was his savings going first? And then all he's doing is redirecting that money back to himself. So now he makes his deposit in year 2, and notice the cash value went up. There's more to take as a loan. He's made the payments of $448 times 12, which is $53.74, back to himself for a total cash bucket of 21 grand. Well, guess what he's going to do? Knock out Nordstrom, Wells Fargo, private loan. And now he's recaptured more. Like, look, within 2 years, he's given himself a $24,000 increase in cash flow. money that was leaving his family forever. Year 3, makes another deposit, and something crazy happens. Crazy. Year 3, he puts in 25 grand. He's got 25 grand and $541 he can use. And he's paid himself back 23,000. $48,000 of cash. He's going to pay off that Beamer, that boat, and recapture those payments back to himself. Because remember, what's the most valuable business in the world? The banking business. So this doc's still a chiropractor. He's not working any harder. He's not staying any longer, getting more clients. All he's doing is changing that one thing and learning this new skill set of banking. So far, remember the marathon, in 3 years, he's put in 75 grand. He's taken loans every year immediately. Immediately, we mean within the first 30 days of 55 grand. So how much is left in this policy? Can you guys do the math? 75 minus 55? Is it 20 grand? This is where people will get their minds blown. This is why some of my peers call it the save and spend simultaneously method. Where else can you save $1, uninterrupted compounding interest, and spend $1 at the same time? You've already multiplied the money multiplier method. Are you seeing all the dots? It's like a paint by numbers here. No, you got 75 grand. So year 4, look at the takeaways from the meeting. Thank you for sharing that. That is cool. We're going to put in another 25 grand. Now our cash value has gone up again, right? And then 70,000 total for that year. Doesn't knock out the condo. So year 4 is kind of boring. We don't recapture any additional money. But year 5, again, $25,000 deposit. He's got an extra $2,090 he can use above and beyond what he's deposited. He's going to knock out that, knock down the house, recapture another $879. Do you guys remember how many years are these different each week? He's doing an annual, Austin, so thank you. He's doing an annual premium deposit. You could do it monthly as well. If you agree that the wealthy have more choices, you can choose how to pay your banking system. So great question. So remember, how long did it take him to pay this off in a traditional method? You remember? Was it 19 years, I think? So year 6, look what happens. In year 6, I always ask people, can you fit 16 ounces of water into this 12-ounce mug? And notice it says, the best dad, right? Man, the myth, the legend. So you can't fit 16 ounces of water into a 12-ounce mug. It's going to overflow. Even for you creatives, it'll overflow. So in year 6, this doc has extra money sitting in his segregated account that he can no longer put back inside of this policy. So what's he do? He opens up a second policy. He puts 10,000 into one and it gives him 13,000 he can use. And then the second policy, he deposits 25,000, it gives him 14,000. So he's deposited 35, he can use 27 total of that 35. He's paid himself back 54 grand. He's got 82,000. Is 82,000 more than 76,000? Yes. And we celebrate. This doc from Minnesota has recaptured all of his money. $5,777 times 12. And guess what? We will show you mathematically how you can turn your debts into assets as you go through the money multiplier method and go through the application to get your specially engineered for you whole life policy. We give you a debt blaster after you do the paramedical, and it'll show you what is the mathematical way that's most efficient. Is it going to be paying off the lowest first, which is your snowball? Is it going to be paying off the highest debt first, which is your avalanche? Is it going to be paying highest interest? And then apply the IBC policy on top of that, show you how long it takes to be debt-free and how long does it take to pay yourself back. And this is all complimentary because at the end of the day, we are teaching you how to fish. Don't want to fish for you. The only way it doesn't work is, again, you, the person in the mirror. We want to give you the tools and the teammates that you need. So once you have a policy in force, I always ask, is knowledge power? Is knowledge power? What do you guys think? Knowledge is power. Terry, would you agree that applied knowledge is more powerful? Exactly. If we apply it. So Terry's answer, I love having knowledge, but without application, It's exactly that. It's a conversation starter. So we're going to give you a teammate. I call them your student driver. They're labeled the implementation team, the I team. They're going to map out the debt. And so let's look at the millionaire. Remember I promised you this doc becomes a millionaire. So how do you eat an elephant? One bite at a time. My wife keeps reminding me, Jason, sometimes in what we're doing, you're up trying to eat the ear before you've eaten the feet, right? We've got to be consistent, persistent, and eat it slowly over time. If you don't like elephant, it's just an analogy. We're not hurting any elephants in this presentation, or we will never hurt an elephant. We love elephants. They're super wise. So, and the man or the woman at the top of the mountain did not fall there. They did not get dropped off with a helicopter, most likely either. They had to walk there, one boring step at a time. So patience, it's my biggest word. What's yours? So is it possible to owe no man or no woman nothing? If this machine works for debt and expenses, vacation homes, taxes, boats, BMWs, tuition, what else can it work for? Anything that you can think of, trips around the world, going and gambling in Vegas, whatever you want to use, they will never make you jump through hoops once you have your banking system set up. They'll make you jump through hoops to become a banker, right? Because they've been profitable every year, not because they're willy-nilly, because they want to make sure that they have the right partnerships, just like you want in your business, in your life, in your family, in your friends, the right partnerships, the right communities. So remember, if we continue to pay back the homes in the condo the way we promised, $879 a month times 251, 220 grand. The house, 1221 times 224, 273,000, 493 grand, $500,000. So not quite to $1 million yet, but it gets better. What happens at 4%? And 4% is the guaranteed side of things, right? What if it's the dividend 5 or 6%? Since they've never missed a dividend, I can't guarantee it, but that amount goes up quite a bit, and you're at 750 at 4. What if it's 5 or 6? That's going to increase by more. We're showing you mathematically how by just changing the one thing, this doc has already recaptured, recycled that money, kept more of the money in his family, protected his, because we didn't even talk about the protection piece. So now that you guys know this, guys and gals, don't you think everyone should be doing this? Aren't you here because you know factually there's something here? It's not just because I'm entertaining or fun or funny at times. Not really, but you know, but if we're not doing this, aren't we stealing from our kids and our grandkids? It's like once you see something, you can't unsee it. Like, did you guys watch the Tyson fight? Did you guys all see Tyson's butt? Did I get a yes and no's here? Like, that is seared into my brain forever. Not even. Poor Jason. Yes, I've seen it. I can never unsee it. I'm a visual learner. So I'm just being funny with you all. But imagine that. Like once you see something, you can't unsee it. You must go forward. So Warren, who knows a thing or two about a dollar, if poor people would just do what rich people do, they wouldn't be poor anymore. So I've got bad news for you all. I've really enjoyed our time together. But only one of two things are going to happen in our lifetime, in our existence, in our journey. We're either going to live or we're going to die. Some people like to make it nicer and say we graduate, we cross the rainbow bridge, or whatever you want to call it. But either way, are we better off with or without this? With or without this? With. Thank you, John. So we're at the end of our time together today. And I am so grateful to each and every one of you. This has been a lot of fun today. I'm grateful to each and every one of you. I love teaching this, sharing this with you, and you have given me a gift, your most valuable resource, your time, your energy, and your focus, So some of you will take action. You'll book a call with me. You just scan that little QR code, right? You scan that QR code and you can have a call with me or not. And it's okay because we'll make this available. We'll put this out on our YouTube channel. We'll make sure that you guys can watch this as many times over as you want to. Because if you missed anything, it's okay. Again, give yourself permission. Whatever you don't know yet. Do we have any last questions? Oh, it was Yvonne. Awesome. Well, again, blessings to all of you. Thank you for being here. So excited for your journey. Give yourself permission, and I'll see you guys the next time.
All right, so I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Not only that, I've got a book that I created, Mapping Out the Millionaire Mystery, where we actually show you what the wealthy do in the game they play with money. I want you to have that for free. And if you want to know about all my new videos coming up, click that alert button. Actually, smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.